Hello, everybody, and welcome. We're just about ready to start. Let's do a quick sound check, make sure that everybody can hear me all right. So, if you can please type yes in the question box, that'd be great. Wonderful. Thank you. It's so nice to see so many of you here tonight. So, hi, everybody, and welcome to Vintage Webinar Strategy and Focus Clients Only. So, all of you who are Vintage client can access these special webinars. So, today we are going to talk about crypto, about Bitcoin, where to, what is going on, and basically look at technical ingredients, live chart, and interesting coins that we can have a look at. My name is Tamar Meir, and I'm part of the trading team at Trade with Precision. Now, before we head on to the presentation, we need to go through some risk warning and disclaimers. So please have a read through them, make sure that you agree with them before continuing on to the presentation. I'm going to give you a couple of seconds to read this slide. All right, so let's get started. So what are we going to see on the agenda for tonight? So we're going to talk about technical levels. We're going to talk about trend line, moving averages. We're going to talk about momentum indicators. We're going to talk a little bit about the differences in the coins. And we're going to look at relationship between coins as well. So without further ado, let's move straight into the chart. And by the way, guys, if you've got any questions, if things are unclear, please feel free to type your questions in the question box and I'll pick them up as we go. Now, I want to talk a little bit about these recent moves in the market. So this recent breakout, or not so recent, but within a couple of days ago, into this strong bull market's all-time high. So we're going to talk a little bit about, we're going to ask the question, what is going on? What is the difference with before that, when we had the rise here to these back then all-time highs? There were different reasons for what was going on. There was a lot of understanding or assumptions in the market that Bitcoin is basically, or the crypto stratosphere is a product of low rates environment. So they were talking about there's a lot of pumping of money into the economy. We were back then at the days and age of QE, and there was a lot of money that was looking for a house, looking for a place to stay. And we saw different reaction as we progressed along the years. So for example, back here in 2017, this is when we topped about 20,000. So we not only reached an area of a big round number. I was believe back in December. Yeah, this was December. There was approval. So there was a talk that in the CME we're gonna see some futures of that. So the whole discussion started to come through. So it was more a case of buy the rumors and then sell the fact, and we saw that reaction. And along the way, there were all kind of smaller adaptation of the coins into the market, and we all know what happened this time. So this time was the approval of the ETFs, and this whole idea. But before that, we started to see a rise, even though we were moving away from low interest rate environment. So this idea that we are looking at Bitcoin, and because money flows into Bitcoins because there is nowhere to park it in the bank for an interest rate, bonds were not yielding much. So that idea has already went out the window. There were another ideas that came along through the years. Part of it was the halving of the Bitcoin. So we all know that it takes longer and longer to generate another Bitcoin, more electricity, more energy. And every couple of years, it halves the amount that it can generate until it gets to a certain finite amount. Well, we saw some reaction in a hope for the situation like that. But then again, there wasn't much of a correlation. We saw some market going lower, even though we had a halving event going on as that. So there, before that, before the hype over here, there was a lot of talks about Web3, about other application of the whole idea of crypto, where we can put it in different technology. There were a lot of companies that are coming up and talking about the whole technology, that it's a way to revolutionize the technology arena and all that, and that also fade away. So it comes into the question, what is going on now? What now makes this bull market a little bit different. So when we're looking at a bull market in the stocks, for example, and we look at this big rise, we're looking at PE ratios, and we're looking at economic activities and looking for the inflation that currently in the US, while having a sneak peek higher, overall was coming lower. We have a few things to base that on. So we're trying to find the same explanation going on in the cryptocurrency arena. And what was kind of like emerging out is this, that there is some sort of idea that everybody's buying because the previous person were buying. So kind of like one person is in front running the other. So we have to take that into consideration, because if you buy, say, cocoa as an example, because that one has topped copper at the moment. It's quite interesting. It just went above 9,000. So if we're looking at that, there's some usage to that. There is some application. We all know Easter is coming. But even before that, there is some sort of something behind it. So we have to ask the question, what's going on behind it? And interestingly enough, there's not a lot of explanation what is going on behind it. So that is kind of like a background into the previous highs and lows. We all know the low happened here. The SEC was taking Binance to court. The collapse of ETF. So events are moving the market. So we're always looking for some kind of explanation. What is the event that pushed the market higher here as well? And the best explanation that I've seen is the front runners, is the one trying to be before the other. Now, there's a couple of interesting things that is going on around this arena as well, because some of the coins have performed a lot better than the others. And I'm not just talking about meme coins. So for example, Dogecoin didn't perform as well as coin a dog with hat. Both are meme coins, but they are based on different technology. So we know that technology that is based on things that are based on old technology like Ethereum, so older chains, they didn't perform as well as the more younger, low-cost chains like Solana. So taking all of that into consideration, what I want to do today is look at it as a chart is a chart is a chart. So this is basically technical analysis, pure technical analysis. But I also want to raise that question of what moves the market, right? So what kind of like event? We all know there's the acceptance of the ETF, but there's a lot of institutional money that can go into Bitcoin a lot easier. But what moves the meme market as well? Because that's a whole different, that's not an ETF necessarily. So let's take a look from a technical point of view. So I've got here is, we're going to start with Bitcoin and then we're going to move to different ones. So I'm looking here at the monthly chart of Bitcoin. Now, what I've got here, just to share with you, because I don't know how advanced you guys are. So we've got a couple of, participants here, and we also have people on the streaming. So I want to drill back into a lower level, so the beginner level, and then build on top of that. So what I've got here, I draw moving average. So I've got exponential moving averages, but you can use simple moving average. It's pretty much a similar scenario, depending on the way I'm looking at it. So I'm looking at it as a relationship to price. So the 10 is in black, the 20 is in blue, and the 50 is in red. And what we can see is that when the market is in a strong moving uptrend, we can see that the moving averages became to fan, and they are in the right order for an uptrend, so 10 above the 20, above the 50. And you can also spot there's a nice distance between them as well. So when you've got that fanning of moving average, and you've got that big space between them, we tend to see a strong trend in that chart. If you take a look at what's going on here, you can see once again, we got the 10 above the 20, above the 50, and the trend was strong. Now, that doesn't mean that when we start to push into a downtrend like we did over here, it means that the moving averages are crossing straight away. Remind you, this is a monthly chart. It will take a long while, but while they're crossing over, then that uptrend is no longer there. We are looking into a different element. When you see here, the moving average is kind of like squished. That means that we're basically moving sideways. So the moving averages, it's not kind of like a reason to enter or not to enter. They just give us that excess amount of information, that additional element into how strong is the trend, how good is this trend. So that is one thing that we're looking at to assess the strength of a trend. The second thing that we're looking at is the momentum indicator. So what I've got here currently is the MACD and the RSI. Now, what we're looking for, we don't looking for MACD or RSI crossover or overbought or oversold, even though, as you can see in this case, we are definitely sitting in the overbought area. But mind you, when we reach that high over here, we haven't even gone up into the overbought area before we started to slam dunk. So it doesn't necessarily mean that if we're sitting in this area below the oversold or overbought, that means that we have a signal there. You can see that it's not that accurate. It can help if we are looking for a combination of elements, but on itself, it's not very strong and it's not very accurate either, as you can see in this case. It doesn't mean that when it's sitting here, it didn't even got to the oversold area and it started to rise again. So it didn't give any signals whatsoever in this case. So now we see there's a couple of things that we want to look at. We want to look at the trend itself. So when we're looking at the trend itself, so let me just take hands so I can explain that. Just a color that everybody can see. There we go. So we're looking at the trend. We've got a low and a high and a higher low and a higher high. And it's a massive higher high. Now, when you can look at this and compare where the highs here within that momentum indicators to the highs, you see this one, if I take a vertical line, what I can see, and basically this is the simplest way of sort of assessing are the momentum indicator converging or diverging. If I look at the ultimate highs, so I don't really care if this candle went slightly higher than this one. It's kind of like a visual assessment. If I look at it and say the high of this area is definitely higher than this one, it's not even a questionable, is it higher? Same goes to the RSI, then the momentum indicators are converging. So according to the momentum indicators, we still have a strong trend on this monthly time frame. So these are the two elements that we are utilizing to assess the strength of a trend. Now, the other thing that we can sort of get out of these elements here, let me just clear this drawing, is what we call overextension. And this is a really important notion, and that's why I started with that little bit of what moves the market, right? So when overextension, by its definition, is basically the distance between where price action sits right now and its moving average. And think about it as a rubber band. So when you take a rubber band and you put it between your two hands and you stretch and you stretch and you stretch, right? So you put a lot of force on that rubber band and then you release it. What happened? It wants to come back to its equilibrium state, right? So its state of balance. If you think about the market, when it detached from its moving averages, it's kind of like that rubber band that stretches and stretches and stretches. And when you release it, needs to be some sort of release of this very, very strong buying pressure. Now, that doesn't mean we're turning into a downtrend, and it doesn't mean a strong sell-off. And it could also mean just meandering slowly back into the averages. But it's more of a element of warning sign. The more or the higher the overextension is, the higher the likelihood that there's going to be some sort of a pullback, being a strong pullback, a mellow pullback, a sideways pullback. But it's sort of like put into question how much further can this thing continue without a bit of a pullback. And you can see that in many charts. So if you take the chart of the yen, for example, as they were rising toward, I think it was 22, and it was going higher and higher and higher, and it looked like nothing going to stop the weakening of the yen. And then something happened, some sort of elements happened. It's not like the Bank of Japan back then changed any policy or whatnot, but the yen started to strengthen. That overextension came into play. So it really doesn't matter which is the product behind it and the reason and the geopolitical whatever winds that are flowing at that time. From a technical point of view, that overextension can serve as a warning sign. Doesn't mean that it won't continue even higher. It doesn't mean that it won't get into 80. What it means is that the further or the stronger or the bigger the overextension, the higher the likelihood that we're going to see some pullbacks. Now, mind you, this is the monthly chart. So this is very overextended in the context of the monthly chart. So what I want to do now basically is mark some levels, right? So let's just erase all my drawing and come back to this so I can draw some lines. So what I'm going to do here is I'm going to look at lines that are basically support and resistance or level of interest, right? So the way we define levels of support and resistance is 2 touches or more at a level, at an area, at a precise level, at a vertical line, oh sorry, horizontal line. But what you can see from here as an example is if I look at this area, this to me would be some sort of an interest, right? This is the previous high. So something going on here, that was the previous high that pushed to a low, might be something. But according to the monthly chart, there's a going on here. There's just one touch. Another thing that I'll be interested here is potentially the crossing between these 2 bullish candles. It's also the area where we still colored the candle. So above that, it was all weak. So basically the buyers tried to run over and the sellers took over. So they got rejected. So that's basically the only thing that I can get on what's going on here right now from this time frame. The other thing though, is where we have more data, when we have more activity around that area. And that's why all-time highs are very hard, because we can't really go to the left and say, let's look at what was going on there and we can extrapolate it to what's going on right now. We don't have that information. But if you look at this area, I do have that information. I've got a touch and that pushed to a lower low, and then we came back, rejected, pulled back, and broke through it. So this is more of an interesting level. So I'm going to color it a little bit differently. Let's put it in purple. So now I want to go down into the weekly chart. So go down into the weekly, we can see here story. What are we looking for? Let's start with the moving averages. So we've got an uptrend here. We've got clear series of higher highs, higher lows. I think there is a little bug here. This look like a duplication of the same candle. But what we've got here is moving averages fanning and in the correct order. And we've got convergence here on the momentum indicators. So far, it's telling us that we are looking at a strong trend. What's interesting also is that we already had a pullback into that level, into that crossing, and into the moving averages. So we were very close into the moving averages. So from the context of the higher frame, so the context of the weekly, we actually don't have much of an overextension. So we kind of worked it out a little bit, but there is still a bit of a distance here. So we might even see some more pulling back. But even if we continue from here higher, it's still not that overextended as we've seen there on the weekly. So what does it mean? It means that there are smaller pullbacks in the context of lower time frame that can allow us for potential opportunities, but we have to keep that warning sign in mind of that monthly chart. Think about a monthly chart as something heavy, right? Like a big vehicle, right? Or a ship in the water, like those big cruisers. It won't just stop and do a U-turn on the spot, right? This is not a motorcycle, right? But what it will do, it will cover offer a bit of distance until it turns. So even if we want to see those pullback, it usually starts from the lower time frame and kind of work itself up to the higher time frame. So looking here on the daily chart, so let's see what the daily chart is telling us. Actually, if we go back into the week, let's have a look a bit. If we can get some more information about the levels. So if I'm going back a bit, can I get anything a bit more interesting around what's going on here? Well, actually, I can be a bit more precise about this level because I can see all these wicks around here. Now I get a bit more data. I see more touches. I'll move my line into here. Right, and as you can see on the way up, we pull back into it once again. And interestingly enough, very close to that 60,000 round number. So again, something interesting to look out, an area, look for pullbacks. Now, looking here on the daily, just wait for it to load. And we can see it's the same story. It's the moving averages fanning and in the correct order. And over here on these highs, we had nice convergence. Now, this is where things start to be more interesting. So let's just mark it with a pen here. So we're looking at this high and we're looking at this high. Now I'm comparing it to the highs below it, right? On the MACD and the RSI. And this is the next high. Now, you might tell me, oh, look, but this high is lower than this one. It's true. The RSI is a lot more sensitive in this regard. So it's kind of like we need to decide which one of them is actually holding more truth in a way. But as you can see here, when you look at the trend itself, there's not quite a high and a low here. Usually the simplistic definition of what forms a high is a bearish candle and a break below it. And we don't have that here. So we just had this big candle that touched that area, rejected the high, rejected the low, and closed red. That's not really the definition that built a high here and then we broke down into a higher low. We don't have that. So I'm going to go to the ultimate high. Another way to sort of assess, do I have a higher high here? Do I not? Is take a couple of steps back from the computer. And if you look at it and you go, I can still see that this is a high and this is a low, then it's a high and a low. But if you can't and it looks like one big line, then it's probably easier to look at it as one big line. Remember that when looking for technical analysis, we don't want to invent anything that it's not there because we might be the only one buying when everybody else are selling, and we really don't want to be that. So we want to go with the flow. We want to go with the flow of the market. So we want to see what everybody else's are seeing. So now I've got this high, and over here we still have some convergence. We're still higher than the previous high. So we printed here a higher low. That's pretty obvious. And now we're starting to move. Now, you might look at this and you say, this shaping up to be divergence. So the idea is that we haven't really printed that high yet, so we don't know. So a mistake that a lot of traders do is they see this and they jump straight in. They go, currently I have divergence. Currently, we have the beginning of divergence, potentially. That doesn't mean that it's going to be like that. So you got to wait for the high to actually form. So if this thing can't push any higher and go lower and start to trend lower, then this is definitely turning into a lower high, and this would converge to the downside. However, if this will, let's say, just ping this previous high, and we still have something that looks like this, so the market makes higher high, and the momentum indicators are making lower high, now then we're looking at divergence. So what does divergence mean? So divergence is a warning sign to tell us, watch out, we might be running out of momentum. On itself, it's not enough. On itself, it could just warn us that a pullback is underway. You're going to get a small pullback, and off we go in the direction of the trend. So it's not enough for a sell position, but if you accumulate levels and elements that all say the same, we're going to see a push lower, then it starts to look more like an opportunity rather than something that is based on a 50-50 chance. So we're looking for a reason to what's going on. So currently, we don't have that element here. All we have is the market pulling back and starting to push higher. Okay, so we have overextension and still everything meets an uptrend. So now let's move down. I just need to delete this in order to be able to go down the time frame. So I'll jump into the 4 hours. So this is kind of like when we're looking at where to, what can we do? This is a sort of situation that we're gonna go top-down approach. So higher time frame towards the lower time frame, and look for areas, look for levels, look for whatever is interesting. So when I look at the 4 hours, we can see that now this is that level that we can see there's actually a couple. This is the previous all-time high that we had, and we just marked it because all-time high. And you can see that there's something that those point of memory on the chart are important. So we marked it on the monthly based on just 1 week, on one candle a month. And actually, a year or two later, we can see the market still react that area. So this is can help us be better called detectives. Price action might stop. So we can see this reaction right here. So let's see what we can do around this area. So we had here, once we broke above it, we put back into it and made a higher high. So it stands to reason that if we get here again, we'll see some more reaction. So we came here, we pushed the price, couldn't go any higher, so therefore we went lower. Touched it again, rejected, lower low. Touched it again, another lower low. So basically a lot of sellers were here. Then we broke through it, and now we're sitting around here. So we're kind of working out this area. Now, if I'm looking at where it sits right now, personally, I don't really like that situation because this area still needs to be worked out. There was a strong sell-off that came here. There's a push and a second push that came below that level. We just broke above it, a much back in, and then I'd look for a potential setup on the way out. But still remember that very excessive overextension that we have there on the higher time frame, and I have anything that is exciting on this chart personally. Now, what we do have, momentum indicators are converging to the upside and moving averages are back into an uptrend, and we really do have an uptrend on the 4 hours. So what I like to do is mostly look at levels. So for example, this would be a level that I'll be potentially looking at if it wasn't shy of a previous level that pushed to a lower low. And sometimes we have to look at this thing and go, actually, there's a sideways and we're sitting too high on this wave. So why don't I let the market do what it wants to do? And then I'll look for better areas. So for me, what I'm interested in personally, it's more of a pullback. So this is not enough pullback for me. This is something that the weekly, I'd rather see a better pullback there on the weekly. So if we go back into the weekly, and that's also because we are sitting at all-time highs, it might mean that when we're pulling back, we have more room to move. It's always about that blue size, how much further can I go? And when you're sitting, and this is kind of like for everything really that's sitting at all-time highs, beside having round numbers, which are psychological levels, we don't really know what sits there. We don't really know what's going on there. So we kind of like, from a technical perspective, driving blind. So in this case, I would much prefer a pullback on the contents of the weekly. We haven't really closed above that area, so that's another thing. So if I get a weekly close above it, that'll be nicer. And then a bit more release of that buying pressure, and then a pullback into the 60,000 even. That will be very, very nice. We pull back close, so you can see we tap here, but we might see another round of sellers. There was a lot of money flowing out of ETFs over this pullback after this big run. So it is, again, it could a question of, yes, of course, if there will be more buyers wanting to jump in on the action, this thing will move higher. But I like to look more on the risk versus the reward. And when I look at something that's very overextended, could look like the move has already happened and I'll be very, very late into the party. So from technical analysis, we want to capture that sweet spot, the area that the market hasn't just pulled back into, have a high probability of a move with a lower probability of a risk. That's the idea of trading. Very different than investing, because in investing, yeah, you can get in today, you can get it in a week time, maybe the price will fluctuate, but if you're there for 10 years, maybe you end up making money, or maybe that share, that market, that coin will be kicked out of the market and nobody would know about it. That is a sort of like a risk that we're taking. But with trading, we can pinpoint the areas, pinpoint the level, and actually time our entry with a lower risk area. So currently, when we're sitting so high on the wave from where the daily is, and obviously the where it sits, I would actually, I'll let it go at the moment. So I would not look for anything. I don't see from a technical point of view any reason right here, but you know, there could be fundamental reason that someone might be interested in. So this is the Bitcoin, this is Bitcoin. So this is the main one. But if there's a couple that I want to take a look at. So I want to look at Ethereum, because they didn't move us the same. So, and then I'm going to look at, actually, what I'm going to do, I'm going to look at the comparison between Ethereum and Bitcoin, because this one is actually of very interest. So let me just find that code, ETHB. HB. There we go. So this becomes a bit more interesting, right? Now I've got something to compare to, I've got something to. So like I mentioned, these rise that we've seen in Bitcoin and the rise in Solana as an example, we didn't see the same reaction in Ethereum. So this is a more of an old technology, and you know, it's not as low cost as Solana. So here, I've got some activity, I've got some things to look at. So there's some elements here. We're not sitting at all-time highs or lows, and we've got something to look at and compare. So let's start. And this is also a very nice downtrend. So what do we see here? So let's start here with the daily. And we see we've got high, low, high, and a lower low. We also got the moving averages 10, 20, 50. Often all in the correct order for a downtrend, right? We do have a little bit of overextension here, and we printed a lower low, right? So we touched and pinged that 1,000 area, or 7 in this case, 7.0. So what I'm looking at is what else can we do with these things. So I want to mark some levels, I want to mark some areas. I've got the momentum indicators are converging here to the downside as well. So as the market was making low, so here, this is an interesting thing. Here we're in a downtrend, yeah? So in a downtrend, we're not comparing the highs, we're comparing the lows. Why? Because this is the extremity the market is going to. So you might look at it and say, but hey, look, Tamar, this looks more even than lower low, and that is fine. So what we don't want to see is divergence. We don't want to see, say, for example, the market is making lower low and the momentum indicators are making higher lows. That is signs that there's a build-up of buying momentum and we might see deeper pullbacks. So in the case of this one, I want to mark these levels. So we've got agreement here to the downside. Have a bit of explanation behind it. Let's call it why we're seeing the sell-off of Ethereum versus Bitcoin. So I kind of like that. I feel that when I don't know, you know, if there's something, you know, something is rising up because it's rising up, and the only reason why it's rising up is because it's rising up, that puts an element of risk for me. But when I know, for example, why Ethereum is losing value to Bitcoin, that makes more sense. So I want to mark here this level. I really like this level. I'll change the color here so it will be a bit clearer. So see, this is that blue level, and we've got here a touch and another touch. We also have got a touch here, another one here, and another one here. So zoom out a bit, we'll see there's more touches around that level. So it's quite an important level on this market, right? So the other element that I want to add is the Fibonacci retracement. So that's another thing that we can sort of look at in technical analysis. So when I look at the Fibonacci retracement, what I do, I'll take it, oh, come on, release, there we go. So I take it the previous high, and the reason why I like this one for the high, it touched here at the low, it touched at that level, it bounced off it, but couldn't go any higher. That's a very bearish sign for me. We had another touch here, sideways, and poof, went away. So this is high that I draw the Fibonacci from. It doesn't matter if even if we had it from here, it will be pretty much the same. And then we'll take it all the way to the extreme, so to the low. And what we can see is that this level that I marked at around the 8.5 is clustering very nicely with the 61.8% retracement. So and this is another technical element that we are using. So when we're looking at Fibonacci retracement, what we're looking for is this idea of pullbacks. So when we spoke about the moving averages, we looked at them and said, tell us the strength of the trend. But if they're overextended, then we are expecting a bit of a pullback, but it doesn't really tell us where to with that pullback, right? It doesn't really tell us, hey, look, this pullback can go into this level. So let's say that I wanted to look for an opportunity on this market, and I'm looking at it right now. And I'm looking and I go, well, the move has already happened. So if I sell the market right here, right now, I might be riding a pullback here, which means I'm increasing my risk. I need my stop loss in order to have protection from the trend needs to be above here. So entry here, stop loss here, that's a huge move, right? So if I wanted to go for a one-to-one, I would need to break this previous low and even go further than that, like a lot further than this ultimate low over here. So it might be a bit of an issue. That might be a bit of a problem. So what if I can look for a place that I can get a pullback into? So the way we use Fibonacci retracement is we're looking at the layers of the Fibonacci retracement. And the pullbacks into, and you can see them here. I don't know if you can see it very clearly. It's on, maybe I should push this in here so you can see the number clearly. There we go. So the area here, the 23.8 is what we consider a bit more of a shallow pullback. The area between the 50 and the 61.8% retracement is what we call the sweet spot. It's an area the market, if and when it pulls back into, releases some of its buying or selling pressure, but it didn't go too deep or too shallow, right? It's kind of like just right. Then 78 and the 88 percentage retracement, that is a deeper pullback. And if you think about it, when the market pulled back into, it just jumped here a little bit too much for me. If the market pulled back 23 or the 38, it not necessarily will catch up with its averages, right? So we'll still be a little bit overextended. When the market push into the 78, what could happen is we're pushing the area between the 10 and the 20 moving averages. So that's kind of like the equilibrium area. So we're pushing into above that area and toward the 50%, which is a deep pullback, which might even kill the trend as well. So and have the moving averages not necessarily kill the trend on the lower time frame, but have the moving averages cross over. So that will kill the flow of the trend. So we want to look for a pullback in an area that from one hand, it's enough of a pullback to give the market another burst of energy to make another move. But on the other hand, not be too deep that it would reverse, kick us out, and continue in the other direction. So the area that we're looking at, the sweet spot, is the 50 to the 61.8. And the other thing that we want to look at is, are there any other elements there? What can sort of form kind of like a barrier between price action and this element of a pullback? What can stop that pullback? Call it a barrier, right? So kind of like building a break wall. So if I've got this level and the 61.8% retracement, that's a buildup of a barrier, one on top of the other. That's two layers in my break wall. And I like the fact that from here, we had rejection, 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 and then we cleared that. So at the beginning, there was still buyers in at that level until no more. So I'm looking for a pullback into that level and then a reaction to that level. So this is something that I quite like. There's the beginning of the move. It's been a strong push of it. It's consolidated for a while. So whoever wanted to try and buy around here, try to have that go until it went lower. Got convergence on the momentum indicator. So I quite like this one for a potential setup short if and when the market will pull back into that level. Now, if and when it will do that, it could also bring it back into the averages, so I won't have that excess overextension. If we look here on the higher time frame, so let's move into the weekly, then we can see on the weekly, we are quite overextended here. So pull back in the context of the weekly, we also come back into the average as well. So that is something that I quite like. Looking into lower time frame for any sign, we'll pull back into that area. I'll be drilling down into lower time frame, looking for reasons for potential short. So depending on the candles, if it just flies through it, clearly there's no opportunity. But if it starts to lose momentum around that area, I'll be very, very interested. All right, any questions about this one? So we can look at a couple more if there's anyone that you're interested in, one more than the other. I'm quite happy to look at this. Otherwise, I'm just going to look for stuff from the list that we have. Really, there's a huge on offer from Vantage for us on available. But I want to take a look at Dogecoin because that was pretty much in media quite a lot. So it is a meme coin, right? So we gotta ask ourselves the question, I mean, what's in it, right? I mean, I have to ask the question, this is not coca or any other gold or something tangible, but what moves the market? It's a question that we need to ask. But we're looking here from a technical point of view. So let's mark the level because again, this one is not at all-time high, right? So let's take a look. The one thing that we want to mark is the levels here. So we can see there's a level. I like all the rejection, 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 because this is what is currently trying to work out. It's not precise. And one of the things is when you're looking at log, so things that maybe not have a big amount of volume, we do tend to get a lot of spiky reaction as well. So that's something to thinking about as well. See that we came into that area and be precise in here because there's some touches here and there's some touches here. So I'll kind of put it somewhere oh, Willow. That is interesting. It happened to me a couple of times throughout the day, even though I'm still using it. So I don't know what's going on. Maybe the storms that we have in decided to kill NBN somehow. I don't know, but I've been kicked out a couple of times today. So we'll just load it quickly. In the meantime, if you've got any questions, I'm very happy to answer them. And it's very weird that it says internet connection lost, where there's no issue with the GoTo. So it is what it is. All right. Let's just wait for it to load. Questions while it's slow. Let's just go into the weekly. Okay, cool. Very cool. Oh, and if you've got any coins that you want to have a look at, that's also put it in the list. All right, so we can see here on the weekly, we do have that uptrend. Again, I've got here multiplied candles for the weekly for some reason, but we are overextended here. And we do have convergence on the momentum indicators, and we do have moving averages fanning and in the correct order. But we're coming up into a level that was strong for the sellers. So they picked up from here, they tried to go higher, the buyers, and we broke lower, rejected, went lower, rejected, went lower some more. So I would expect some sort of activity in around this area, the 0.21. But as you can see, this price action is a lot more erratic, not a lot of nice flowing trend here. So this is this one. Let's see what else can we can have a look at. So what was more interesting? So why don't we look at Solana? Actually, we spoke a lot about the idea of Solana and the idea of being called more newer technology. So let's take a look and compare this one as well. So Solana as well is not at old highs as we've seen here as we've seen with Bitcoin, but as we can see, it had a strong move, and when we had the pullback, Solana had a shorter pullback than the other. So we've seen a stronger pullback on Ethereum as an example rather than Solana. So you can see that they're not all created equal. All right. So let's take a look from a point of view. So in this case, a bit of a more technical area. What I like of this one, and I'm just going to go and mark the high of this just to show you. So the area, the high that I'm looking at is this high right here. Let me change the color. So let's put it in red, orange. So you can see there was a high here that put lower. If we take a look then with this push higher, it actually pinged that area, and I like that. Now I'm expecting a bit of a pullback, but what it tells when I get a high that pinged an area that was the area that the sellers took control and were able to push the price not only once but twice here. So lots of sellers were able to get over the market. And now when the buyers basically turned the ship around and started to push higher, the fact that we pinged that high quite positive for me. But on the other hand, we're still overextended, right? So if we'll take a look at this move, let's say on the monthly, I just wait for it to load. It looks like a parabolic move, like a U shape. But you can see how massively overextended we are. So that's an issue, right? That's a bit of a problem here because when we've got overextension, we don't know when, we don't know how, we don't know what will bring it. But if we're looking to buy at massive overextension, we need to be aware that from a technical point of view, there's a high likelihood that we will see a pullback. Now, it doesn't mean that the pullback will happen tomorrow. It might be 3 months from now, but it's just increased risk. So in the case of Solana, what I'm looking for is a proper pullback. And I like here, I've got a level, I've got an area to pull back into. So the area that I'm interested in is in and around the 122 area, just sitting around here. It's a previous we pushed into here, pull back, came at it again, and then pull back, broke above, went inside and got out. And not only out, the buyers that were here were able to ping that previous area of the high. Now you can see another touch here on the way down. So that's an area of interest. And if we'll take a look on daily, kind of get a bit more information into what is going on around those levels. So can I see more touches? It's really the case when it's sort of like you put it in magnifying glass. So when you look at it on the weekly, it look like, and we've seen it, a bit of a rejection candle before we pushed higher. But when you look at it in the context of the daily, you get a bit more in. So let's let's have a look. So we've got the level and we've got that push. Now, quite interesting. It's a very similar look to how Bitcoin looked like on the daily. We're coming back into that high. It's just not the same high. On Bitcoin, we were at a time high. This is not, but it's still a significant high. So in this case, I want to see a proper pullback. It will be a pullback in the context of the weekly. So if we pull back from here, however we'll do that pullback, it's a big pullback that I'm after. So it might go all the way to the 120. It might find itself around the 140 because as we put that magnifying glass, we can see that there's some more levels going on. So that will be the next one. Let's change the color. Put a purple. So this is another interesting area. There's two touches here. It's not precise, it's a meh, but it's still interesting. And of course, if you break this low, there's a chance that we'll see a higher probability, let's call it this way. Because this area, when we pull back in here and pushed higher, we couldn't go any higher. Now the pullback here didn't go all the way. If this is failing that high, then and just clear in the middle but not this high, then if we'll roll over, I'd like to see more of what the sellers that sit here kind of need to have their say. So they were in control, they were riding this market, they were calling the shots. At some time to have their turn in order to pull the price lower. So these are areas looking at for potential stops. My preferred around here, because the more you release that buying pressure, the more area or this you have. Thing is, when we have a turn, you wanna actually see in high probability that the turn has happened. So if we have, and let me just draw this idea here. If you've got a downtrend and now you're sitting here, how do you know that this move that started to happen here is actually a turn and we're going to go higher rather than just a pullback on the floor? You can see some signs. You got to see a proof that this is happening. And the same goes after we have this downtrend. So let's say we do get some sort of a move toward that low. If this is happening somewhere around here, I still need to have some sort of a change to show me that are indeed moving higher. So if that change happens somewhere around here, once again, I'm too high up. But if that push happens somewhere here, and now we're starting to see something like this and sits above here, then I'm very, very happy with a situation like that, because it means it's in my area. It sits there at the location that I'm after, and I actually got a confirmation of the intention as well. So in my book, it's location and intention. This is my two big ones. So if I don't see the intention, or if it's in the wrong location, then there's no setup. And in trading, you have to be patient, because if you jump in and you chase the market, you've got a very high likelihood of getting, punched in the face or kicked and knocked out. So we don't want that. We want to make sure that we are looking after our account, and we're looking after what we do after our money. We worked hard for that money. We don't want to risk it on just chasing things. We want to make sure we're looking at the moves and when they're the right place to go. And a lot of the time when the media picks up interest about something, this is tend to be the not so great time to look at it. So with trading, if we want to be successful traders, we need to predict the market rather than chase the market. Okay, that is kind of like more of a risk management approach. So coming back to this one, and I just want to, by the way, for a turn on the uptrend, will be similar. This is the uptrend. You don't know that this is the beginning of a downtrend, right? Even if it pulls back all the way down here, you still don't know that, because it can back up, come down again, and come up. So this is not necessarily a beginning. This could be just a deeper pullback on this time frame, but on the time frame higher up, it will just be a pullback and a move away. So be very, very careful from seeing things that are not yet confirmed, right? So sometimes we so want to pick the high or the low in the market that we end up jumping in as the next wave of selling coming in, and we are the one that decided to buy. So we need to look for signs that actually a pullback is over. So same like with the setup that I was looking at before, the one that I quite like, I still need to see that the setup is there. I still need to see the intention. It's not enough to have the market in the right location. Okay, so that's another sort of like it's different from trading versus investing as well, because with trading we don't want to be for too long, right? Once we've got our move, then we need to look for the next opportunity, because the question is, do we ride big pullbacks, or do we want to take our target and go? That's another thing. So management of targets as well. Okay, so with this one, let's just drill down slightly into the fours. We have a couple of so we can take a look at that. Because this action is a bit of a iffy sort of thing. And this is, again, that's kind of like the example that I was drawing. So let's just take the drawing tool. So if we've got here this uptrend, right? And then we've got this pullback. Nothing says that this is going to be the next uptrend. We don't have that information clearly. You can see we pull back, we pushed higher. It might go higher, it might not. We don't have anything here that states that this is going to go higher and break, even if it clears the middle. And so I'm looking at this as the middle and come back all the way up. It might fail again around this level and then roll over. So where it sits right now with the level up above, my plan for this one is to wait for a proper pullback and not chase this market. So once again, sometimes there's a lot for us to do, and sometimes we need to monitor our risk and maybe look for different things as well. So with the big question of where to with these ones, so if we go back into Bitcoin, so let's just have a look at the charts. So when we're looking at something and we go, where can it get to? We have to be a bit more critical thinking in that respect, because there is nothing to say yes it will get there, but there are also nothing to say no it will not get there. So what we can do is make decision based on what we see here right now. You cannot make decision based on what would happen in the future. Go back to your past self and say buy it because it ended up going there, because that's never going to happen. So where we gotta remove the hype from it and just look at it as a chart. As a chart, it looks very strong because we broke these previous highs in low, but what we also have is overextension. So if this for some reason decide to pull back in and around that 50,000, now that's a great area from the monthly point of view to pull back into. There we might see a good reason for potential setups on the higher time frame. That doesn't mean that there won't be setups along the way. The question of where can it stop or others stop, I gotta say, with the so-called expert on this, and they're previously the expert on interest rate, and the expert on what the Federal Reserve will do, the expert of what everybody else would do, turns to be very, very wrong. So prediction is it's not a very high probability profession, because you know, you look at the weather, even prediction is probabilities. There's no certainty in it, and we tend to forget about that. So when we ask the question, where would this get to? We need to remember that no one knows, right? It does yes and it doesn't say no. The thing that we can trade is what we see. You can't trade the next whatever happens. You can look to set us on a setup and an opportunity of what's happening right now. And there are plenty of opportunities happening right now in all different markets. The question is, what do you see right now? So from that point, I see massive overextension. So even if it goes higher, we as traders, we have to learn to hone in on the best possible opportunities and look at them and take them, and not think about could have, should have, would have if the setup wasn't there. A good trader protect their capital. A good trader protect their risk more than chasing trends. So having said that, there's plenty others that actually look quite interesting, like the one that we've seen. But in the case of Woody there, that's more for the media to make a hype on. Real traders look at what's going on right now. So what's going on right now? Yes, it's got to move, but for an opportunity, I need to see a pullback. The other coins, there are others like that, the one that we saw, Ethereum versus Bitcoin, that's currently my favorite around them. Now, if you've got any questions, do let me know. Let's jump back into our live market. the slide, sorry, and have a look at this one. So you guys, if you've got any questions, I'm very happy to stay and answer them. If you've got any question about the platform or any question about your account, the great team at Vantage will be more than happy to speak with you and help you sort things out or answer any question that you've got. The one thing that I want to leave you with is, again, watch your risk. So for every opportunity that you're looking at, make sure that your reward is at least as much as your risk. So what we like to call a 1-to-1. So for every dollar that we risk, we're looking to make another dollar. So we're not risking a lot to make little, because over a long period of time, that could very much hurt us. The other thing is watch out for those 6 o'clock news type of things, and make sure that you make your decision based on your trading strategy and your analysis, rather than some sort of a hype. Because while we're starting at the hype and it looks so great, it might be also the thing that kicks us in the face. So if you want to maintain the ability to be a successful, consistent trader for a long period of time, then I've been doing this for years, and I've been riding different waves in the market. The Bitcoin that went to 20,000 and everybody went, and then we got to trade the sell-off and all that. And back then it didn't look like anything is going to stop it either. So there's a lot of things that are going on in the markets, and we just need to look at history to know that we do get a bubble exploding, even if this is a bubble or not a bubble. I'm not putting any definition on it, but the market tend to do that, tend to move and then tend to pull back. So as long as we look after our risk and we make sure that we take high probability setup that are in accordance of our proven trading strategy, that's the way to build up our account. All right. Thank you, everybody that joined me here tonight. Wish you happy trading, and I look forward to see you next time. Bye for now.